Hey folks, Simon here with your Tao Daily for Thursday, the 6th of March, 2024. So for the last couple of days, I've been looking at and sharing with you the idea that the markets were due for a bounce, and it looks like we're starting to get that bounce. So the S&Ps going back to yesterday were up over 1%. The day before that, they were down about 1.2%. If we look at the Qs, yesterday they were up 1.3%. The day before they were down only 0.3%, so outperforming the S&Ps. And you can see the Qs here finding support at the 200-day moving average, which, as I said in yesterday's video, was kind of right where they needed to, having filled the post-election day gap just here. All right, so that gives the Qs permission to have a counter-trend rally here. Now, that doesn't mean to say that we're necessarily safe and we're going to go straight back to new all-time highs. But if you're short-term focused, I think there's a tradable bounce here. At the very least, you do not want to be pressing short bets anymore. What I found interesting, particularly yesterday, the day before yesterday, Tuesday was a weak tape, all right? But if you look at tech, tech was steady, down 0.08%. So that's steady. And tech outperformed today. It was up plus 1.4% versus the S&P's 1% gain. Now, if you look at the classic defensive sectors, you look at things like utilities. Utilities on Tuesday down 1.63%. Remember, tech was about flat. If you look at consumer staples, on Tuesday down 1.7%. Yesterday only up 0.4%. So again, underperforming the S&P. If you look at real estate, did okay yesterday, but the day before it was down, certainly underperforming tech. You look at something like financials. Now, financials aren't necessarily defensive; they're actually more cyclical. But they got smoked. They were down 3.5% on Tuesday and only managed a 0.5% gain yesterday. So this tells me that it's early days, but it does look as though we're getting some sector rotation. A, out of defensives back into more growthy stocks, and B, the market is kind of selling stuff that's worked really, really well, like financials, and picking up stuff that perhaps looks a bit cheap, like tech. We've also seen outperformance out of the semiconductors the last couple of days. It was up 1% the day before yesterday, and it was up 1.85% yesterday. So clearly outperforming the S&P. Semiconductors tend to be a bit of a leading sector. So I think the bounce is probably going to be concentrated in things like the Magnificent Seven. If you look at the Mag 7 here, just look at where they found support. We've got a previous swing high, and it's just about to reclaim the 200 SMA. If you look at the MAGS ETF, similar sort of thing. It's bounced right off the 200-day moving average and finding support again at that previous swing high. So like I said, if you're very short-term focused here, I think we've got a tradable bounce to the upside. At the very least, stop pressing short bets here. I think the market's due for at least a bit of a relief rally. That's what I got for you today. I hope it helps, and I'll catch you tomorrow. Thank you.